Okay. So we'll get things started. We'll open the special council meeting Tuesday, April 23rd, 2024 at 7:01 PM. Council having so requested and with the concurrence of Mayor Harris, a special meeting of the council of the town of Crossfield is hereby called and convened by Mayor Harris as per section 1943 of the Municipal Government Act. We'd like to take this opportunity to acknowledge the traditional territories of the Indigenous peoples of the Treaty 7 region and the Métis Nation of Alberta, Region 3. We respect the histories, languages, and cultures of First Nations, Métis, Inuit, and First Peoples of Canada, whose presence continues to enrich our community. Okay. Are there any changes to item 2.1, April 25th, special meeting agenda? If there's no changes, can I get a motion, please?
Sure.
Go ahead.
I'll make a motion that the agenda be accepted as prepared.
All in favor? Motion carried. Okay, auditor update, item 3.1. Welcome, Lorraine Walker and Morgan Govett. Thank you. Whenever you're ready.
Yeah, we just have to
Get your laptops warmed up. Yep.
So we'll start with the financial statements. Probably the most important piece of those statements. Oh, is it on?
Yeah, just you can pull it closer. There you go.
Does that work?
That's better.
So the most important thing of those financial statements is the fact that it's a clean audit report. And once council has approved, we'll be ready to sign off final.
Okay, I can start. So if you go to the statement of finance, cash has increased. Plus, there's also a line for the aspect of parking office. This is the document. If that was correct, so revenues have increased 1 million from the prior years, and expenses increased 600K. This results in operating surplus of 2 million. However, of this 2 million, 1.1 million represents donated assets.
Any questions so far? We're just going to go through the financials at quite a high level. And if there are any questions, we will pause at the end, or you can stop us. Any detailed analysis, we may have to rely on Amber to assist us, as we don't have the detail with us here this evening. So as Morgan said, your accumulated surplus has increased in the current year by the 2.2 million. You'll see that your budget was only 990,000 in a surplus, and that's your adjusted budget, because the approved budget, as you'll see when we get to that note, was actually at nil. And then it gets adjusted from a cash basis to an accrual basis to come to the 991,000 that's showing on this statement as of right now. The next statement is your statement of changes in net debt. And you can see that net debt at the end of the year, it's decreased. And the movements in it are all those items above. So start with excess of revenue over expenditures, your acquisition of tangible capital assets, you had contributed and donated assets, amortization, and some proceeds on disposal. The next statement is the statement of cash flows. This statement reconciles your closing cash balance from the prior year to the closing cash balance of the current year. It starts out with your excess of revenues over expenditures. It first gets adjusted for any non-cash items because they do not affect that balance. Then the next is your regular operating activities, and you will see that there's a surplus of cash from those activities. Then it is reduced by acquisition of tangible capital assets and repayment of long-term debt, giving you a net change in cash with a positive of $2.5 million.
That's the statement of accumulated surplus. So as mentioned, 52.5 million is your accumulated surplus. However, of this balance, 47.6 million represents capital asset, 4.7 of restricted surplus, leaving an unrestricted surplus of 145.
So in the notes, we're not, some of your significant accounting policies has not changed since your previous year end. There is scrolling. There's some more disclosure. If you go down a little bit, financial instruments, we'll get to that at the end of your notes. That is also another new standard that was implemented in the current year. It has no bearing whatsoever on the numbers that are disclosed in the financial statements. It is just additional disclosures to discuss liquidity risks and things like that. The biggest change to the financial statements is asset retirement obligation. And the town worked with engineers to come up with the estimate for your obligation. And we audited the inputs of that estimate and we agree with it. And I'll get into that more when I get to the findings report. The rest of the notes are just supporting balances on your statement of financial position. And the other note that I would like to point out to you in detail, long ways down, these are big financial. You will see the note on the asset retirement obligation. So it speaks to the adoption of the standard. It's note 13, which is on page 20 of the financial statements that you received. It talks about the accretion expense, so this will get accreted over time. It talks about the different types of potential liabilities for reclamation would be incurred. And you can see in the table that your asset retirement obligations relate to asbestos and the lagoon.
That's noted. So it is disclosed in there. It was adopted using a modified retroactive approach, so that's why there's current year and prior year numbers. Our next important note was
Your financials are involved.
So as Lorraine mentioned before, this reconciles the budget that you guys have approved previously, which was a reconciled budget, a nil surplus. What is presented in financial statements? This includes transfers to from reserves, and also which was included in the financial statements, but not the original budget.
And the next note, you can go down to page 29 and 30, is the prior period adjustment. So there, as a result of working on the retirement obligation, it was noted that a contributed asset in 2018 had not been recorded on the financial statement of the town previous. So it's before current management and before BDO's time. So there was an adjustment. You'll see there how it affected the different account balances to bring this asset onto statements.
I think another important point about this is on the statement itself, 2022, the column says restated and referring to this note. So the restatement is specifically related to this. For ARO, although it's restated, we don't need to mark it as restated because it is a restatement due to an adoption of a new standard, whereas this is due to an error. And then finally, instrument, sorry. So as we noted, this was adopted during the year, but it only had an impact on budget. So we did write up, we did have a write-up for your credit risk, and your liquidity risk, but again, it has no impact on your figures, it's just a disclosure.
So we will pause. Any questions?
Through the chair.
Go ahead.
Page 21, about asset retirement obligations. So the numbers there for the lagoon are, you worked with engineers to get estimates, and that is as close as possible as you could get, then that's a reflection of what the expected land reclamation would be?
Yeah, so we went into detail with Amber as well on this. It is an estimate, and like the things themselves are a little bit tricky because you have to submit a plan to the government, they have to approve. So at this time, the plan, whether or not you leave it as a wetland, or if you change it for other use, when you do change it for another use, we would adjust this, but that for right now, it's that's kind of what the government would require.
Okay, appreciate it.
This might be an Amber question, but just a little more explanation on the Rocky View Foundation charges. What?
The Rocky View Foundation, I believe that'll come up in a next report.
Okay,
That, yeah, that doesn't really impact the 2023 financials.
okay.
Yep.
We'll talk about that in 5 minutes and
Mr. Chair,
go ahead.
heard the Councillor Brennan's comment there about the lagoon reclamation, they specify, that doesn't put a time on it, that just puts a note in our finances for the next 5, 10, 15 years, whatever that's required to clean it up. It doesn't put a time on it once it's in the book, right?
No. So what happens is because this is an estimate, so now we've adopted the standard, we have a prior period adjustment because of the adoption of the standard. So it's an estimate and it's based on the best knowledge as at this year end date and as at today's date. So let's say something happens that would change that in the next fiscal period, or new knowledge becomes available, we may change that estimate, so.
Okay. Yeah. Just making sure that wasn't a time on, but we're putting into our report, thanks.
Any other questions? No questions?
Then I'll just quickly go through our findings report.
Mm-hmm.
So if we can go down to slide 4. First, nope, slide 3 was set. So as we communicated in the planning report, our preliminary materiality, which was based on a percentage of preliminary numbers, was set at 274,000. This is based on interim numbers, so it was not finalized at the time that we issued our planning report to council. So the final materiality was changed to 304,000 as an overall, but there is specific materiality over tangible capital assets and the ARO of 1.3 million because it's based on a percentage of asset value. I just want to point out that we're not aware of any fraud affecting the municipality. We got representations from management and those charged with governance. Nothing came to our attention as a result of our audit procedures. And I just want to let you know that we have complied with all relevant equitable requirements by our governing bodies as well. So our audit started in January of 2024, working on interim numbers, and we'll wrap today with approval of the financial statements by council.
Mr. Chair, what
Go
is
ahead.
TCA and ARO still?
Oh, tangible capital assets
Yep.
and asset retirement. Status of the audit. We have received everything we need. All we are still waiting on this At the time of this report, we were waiting to update our subsequent events and everything. But now on my revised one, all we're waiting for is your. Audit findings. We just discussed the audit findings over our significant risks, not necessarily everything that we looked at during the course of the audit. One of our significant risks is always the recognition of revenue, because there is a fraud risk over all revenue unless we can rebut that risk from an audit perspective, and we cannot in a municipality just due to the complexity of the revenues that are reported. So in order to sign off on this, we looked at all different agreements. We made sure that services had been performed. There's a reasonable assurance exists regarding the measurement and flexibility of consideration received, and no issues were noted. Management override and controls. In all organizations, management is in a unique position whereby they could override controls if they wanted to and manipulate financial results. Management represented to us that fraud in the entity is considered to be low. We conducted testing over journal entries to ensure that they were appropriate in the circumstances. We reviewed all significant estimates to ensure there is no bias to manipulate financial results. We reviewed the minutes of the council and we ensured that anything of a financial impact was appropriately recorded in your financial statements. Again, no issues. Deferred revenue is just the flip side of the risk on revenue recognition, making sure that any amounts that are reported are appropriately reported, and the expenditures associated with those revenues have in fact been spent on amounts that are in accordance with the agreement. Asset retirement obligation, we already talked about quite a bit. We spent a lot of time on this new standard to ensure that the initial estimate of this obligation was appropriate in the circumstances, and no issues were noted. Internal control matters. I believe we have one management letter point. That's it. Is that correct? We'll get to that in a bit, but there were no significant deficiencies whatsoever in internal controls. If there were, they would have been put in this report right at this spot, and we would have a discussion surrounding it. Our only recommendation is for best practices, and it's sometimes difficult to do in an organization that has a small accounting group in it. So it's just a recommendation. Adjusted and unadjusted differences. The summary of unadjusted differences, they all relate to timing, and so they reverse immediately after the fiscal year end. So we reviewed these with management and we agreed that they did not need to be adjusted in the current year's financial statement. The adjusting differences, majority of these differences were given to us by management, or they're just reclassification entries. So that's why it says Town of Crossfield not to make this entry. Other required communication. Potential effect on the financial statements of any material risks and exposures, such as pending litigation, nothing was noted. Material uncertainties related to your ability to continue as a going concern, nothing was noted. Disagreements with management about matters that individually or in the aggregate would have a significant impact on the financial statement, no such disagreements occurred. Matters involving non-compliance with laws or regulations, nothing was noted. Significant related party transactions not in the normal course of operation, nothing was noted. Management consultation with other accountants about significant auditing or accounting matters. We are not aware of any such consultations, and there's no other matters. The rest of the slides, until we get to the appendices, just go through how we audit. So an audit is not set in stone from the planning. So we do our scoping, we assess risk, we perform our tests, and then if we have to expand scope or do additional tests, we keep going in a circle until we can sign off, hopefully, a clean audit report. There is a bunch of literature in here about our audit quality process, and if you want to read that in detail, it's on BDO's website about our audit quality report. And then it discusses some tools up to slide 16. And then we just have some recommended resources that you could look at, slide 18, 19, and 20. There are some more accounting standards coming out next year that will have to be adopted around revenue recognition, and we'll discuss those with management. The next is our appendices, which is our independent auditors report. As I said, it is a clean audit report. The only difference in this audit report from what you would have seen last year is right under the basis for opinion. There's an emphasis of matter, as we have to put right front and center about the statement of financial statement. It's still a clean audit report. That's just an additional paragraph for information. This will be dated today's date if we get counsel. The representation letter is pretty much the same as what was signed in the prior year, with an additional representation around asset retirement obligations. Any questions on our plan? All we need is a motion to approve financial statements.
I'm just curious, are we gonna change the date on that?
Yeah.
Okay,
Yes.
Yeah.
Yeah, when you get all of this in the final,
to today's date.
yes.
Okay.
Yeah.
That sounds good. Because I wasn't even gonna look at that page because it wasn't for until tomorrow.
Yeah.
All right, any questions for the auditors? Okay. And so that's it. And you just need a motion?
To the chair. I'll make the motion that the 2023 audited financial statements for the year ending December 31st, 2023, prepared by BDO Canada LLP, be accepted as presented.
All in favor?
Aye.
We'd like to thank management for all their assistance in the audit. This year was a little bit more difficult than usual because of the adoption of that new standard, but they did a great job.
Excellent. Thank you. And thank you guys for your work too. Okay, it's probably still daylight out there for you guys
It
to drive
is.
home.
And I think the wind is almost dying. I'm
It's
starting to
taking
feel like
forever
I was back in
yesterday.
Lethbridge.
Right? It's been windy lately.
Nice.
Okay, item 3.1. Amber, looks like you're up.
Excellent. This report outlines the proposed budget adjustments for the 2024 operating budget. There are a few adjustments have been made in order to set the property tax rate for 2024. The adjustments are the result of changes to forecast due to external factors and more accurate information received since the approval of the 2024 budget on December 19th, 2023. So back in December, Council approved the 2024 provisional operating budget of $10,230,944, inclusive of transfers to reserve totaling $1,352,000. Proposed budget adjustments to the 2024 operating budget are based on updated information, as I mentioned previously. I'll just highlight the changes for you. The property tax revenue and contracted services. An increase of $43,171 of property tax revenue is required to balance the budget attributed to assessment growth. This will be offset by increasing contracted services by an equivalent amount. So back in December, there was an estimate made for the assessment growth in Crossfield and tax amount associated with that growth. And then once we received the actual assessment numbers, we were able to true up that estimate so that it's more accurate now. Some examples of what are anticipated use of that additional contracted services would be for additional support in various activities such as in some of the areas where there's current in finance, for example, or in different areas where there's an extraordinary need to fill some resources. So pardon me for stumbling. The Northern Regional Economic Development Grant and matching expenditures. The town of Crossfield was awarded a $41,000 grant from the Ministry of Jobs, Economy and Trade to fund projects that support economic development and diversification. The grant revenue had previously not been included in the operating budget. The budget and economic development strategies was also included or increased by the $41,000 to account for the expenditures related to the grant funds. Rocky View Foundation. An increase of $29,477 in both expenditure and requisition tax revenue are required as the 2024 Rocky View Foundation requisition increased from $35,108 in 2023 to $65,112 in 2024. That's equivalent to an 85% increase year over year. Administration had previously budgeted a 2% increase in the operating requisition. The significant increase is due in part to the addition of the new facility in Airdrie, which represents a 67% increase of lodge units in Rocky View Foundation's portfolio.
You want to talk about this one now or at the end? Your preference.
Yeah, I'll just keep going a little bit.
Okay.
Yeah. So the impact to municipal revenue requirement. The proposed budget adjustments do not change the previously approved revenue requirement to be collected through property tax. However, taxpayers will see a small increase due to the Rocky View Foundation requisition adjustment. For example, an average single-family dwelling assessed at $413,000 will see a Rocky View Foundation tax levy of $34 in 2024 compared to $19 in 2023. So from here, council has options to approve the 2024 operating budget as presented or to make any changes they feel necessary to the 2024 budget prior to approval. And I would like to open the floor to any questions.
Great, thanks, Amber. Anybody have questions for Amber?
That's the first one.
Okay. Just let's go back to the Rocky View Foundation increase.
Mhm.
It's my understanding that there was a letter drafted in, I think it was December 4th, but we didn't actually receive any notification until March of 2024.
That's correct. Administration was not prepared for this increase or aware that it was coming down the pipe. When the invoice arrived in the office in March, I reached out to the Chief Operating Officer, interim CAO of the Rocky View Foundation, just to seek a little bit more information on the reason for the dramatic increase. And at that time, he indicated a letter had been issued to all board members of the Rocky View Foundation outlining a budget increase to support new services and explaining some of the rationale behind the operating requisition increase.
So the board members would have received that letter
Yes.
in December 2023.
Yes, the letter was dated December 4th, and it was addressed to the board members of the Rocky View Foundation.
Now, when you talked to Chris, did he expand on why there was a substantial increase? And was it just because of a new facility, or was there extenuating circumstances?
It was my understanding that the increase is due primarily to the addition of the equivalent of 67% additional units, but there's also inflationary impacts, I believe, as well.
And those inflationary impacts are not just from 1 year, but it's been over a period of time that the requisitions haven't been, that increase has been added every year for a number of years. And so now we're trying to play catch up a little bit.
It's possible. I'm not aware of the previous accounting at the Rocky View Foundation or how they base their the requisition.
And I think that one of the other reasons too was when they did this new Airdrie Lodge, there was a stall for at least a year on the time it was ready to go. And by the time they got tenants into there, which led them to still be paying off interest rates and on loans and whatever without having any income in. And I think we're trying to make up for that too.
I think that would be a question probably back to the board.
I did ask them. So I would also say, if we could invite Chris here to present to council at one of the next couple of meetings, so that he can fully explain how we got from 35,000 to, the increase that we're at today. I think that would be really helpful for our taxpayers here in Crossfield.
Yes, I believe he was amenable to coming before council at any time to discuss the foundation.
Excellent. Thanks, Amber. I knew you may not have all the answers, but thanks for answering what you could.
Yep.
Anyone else?
Mr. Chair.
Go ahead.
So just so I follow the increased value of homes. So when that increase is applied, how does the town somewhat forecast for how much additional taxes that comes into play? Is there a formula? Is there if we put a note in there saying that we believe the housing market has increased for revenue? No?
Through the chair, administration does not budget for property taxes based on inflation. We do budget for growth based on estimates. Those estimates are calculated based on a lot permit activity in the prior year. So it's on those indicators of growth, like we see the construction or the new subdivisions and stuff like that. But it would be based on actual, not on inflation. So for example, the average single family dwelling I'm quoting in this report is $413,000. And last year, I believe that average in Crossfield was 385. So the difference between those two averages, that's inflation. But growth is brand new homes that didn't exist before. So that's the difference between, and that's what that's what that budget amount is based on, is brand new assessment that did not exist in Crossfield before.
So when we set the taxation rate, that number doesn't come into play of what a house is sold for now versus
No. Well, yes and no. It of course changes the size of the pie, and maybe the how big each piece of pie is, depending on how your assessment changes compared to average. But that is not how property tax revenue is budgeted. It is not budgeted based on market inflation or deflation. It's based on the budget that council prepares.
But it's based on $30,000 more than it was the year before, right? Is that correct?
Oh, well, we're in my next report for the
Okay.
tax rate. We'll get into that one a little bit more. If you don't mind,
Nope.
Counselor Knight, we'll
We'll get there.
defer that to hopefully try to clear that one up in my next
Sure.
report.
Yeah, in your next report, we talked about the school taxes too, right?
Yeah.
Excellent. Any other questions for Amber on this one? Okay, and you're looking for a motion.
My recommendation is that council accepts the 2024 operating budget in the amount of $10,315,115 as presented.
Okay, can I get a motion from council?
The chair.
Counselor Brennan,
I move that council approve the 2024 operating budget in the amount of $10,315,115
hey, all in favor?
as presented. Pardon me.
Motion carried. Thanks, Amber. Whenever you're ready.
Thank you, Mayor Harris. So now that the budget has been approved, we can talk about setting the 2024 taxation rate. So what I have here before you is bylaw 2024-01 taxation bylaw. It's presented to council for your consideration. This bylaw sets the 2024 tax rate and is built upon the 2024 operating budget. And tonight, administration is asking council to consider all three readings of bylaw 2024-01 taxation bylaw. So I'm just going to read through here, and if there's any point where you have a question, just you can stop me or hold them till the end, whichever works best for you. The municipal tax rate. The MGA authorizes a municipality to pass an annual property tax rate bylaw, imposing a property tax sufficient to raise necessary revenue to pay requisitions, expenditures, and transfers as set out in the approved budget. So that's the important part of this process that council plays. The 2024 rate includes a general tax increase equivalent to $239,000. That's what was previously discussed back in December and approved in December. And a non-residential rate split, so non-residential being in commercial and industrial customers, rate split increased from 1 to 1.2. So that means their rate would be 1.2 times higher than residential property owners' rate. This rate split is aligned with the annual budget policy approved in 2023. The annual property tax bylaw sets out the assessed property values by class and calculates the tax rate required to raise the budgeted tax revenue in accordance with property tax policies. The amount of tax revenue required was just established by yourselves. The education requisition. The 2024 education requisition has increased by $210,360 over 2023. That's an 11.09% increase. The 2024 education property tax rates were frozen at the same rates as 2023. So that's just the rate, but the assessment has changed. Due to strong growth in property assessment values and increased development, the education property tax requisition overall was expected to grow 9.2% province-wide. So what this paragraph tells me is that growth in Crossfield is exceeding the average in Alberta, because 9.2% is the province-wide assessment growth, whereas we're experiencing an 11% increase in our requisition. So that just means that we're outpacing average growth.
Just on this, who sets the education requisition? And I know.
That would be the Minister of Education.
Yeah, the province. Yeah.
The province. Oh,
Yeah, the
okay.
province,
That's
yeah.
what you were trying to get me to say.
Yeah,
Yeah.
that's okay. I just want everybody to know that the town doesn't set this. This
No.
is set by the province, and we don't have any control over the education portion of the taxes.
That's right. It flows through us. We're the collectors on behalf of the province, yeah.
Right.
So we included it on our tax bill and remit to the province the same amount, yeah. Same with Rocky View Foundation. That's another one of the requisitions that the MGA allows municipalities to place on their tax bills. And so it's basically charging that tax on behalf of another body where we collect it and remit it to the province.
Right.
So as previously mentioned, that the Rocky View Foundation requisition is up this year, just over $30,000 more than it was in 2023. And as mentioned previously, also, it's just due to increases to offset rising costs due to the new facility and inflation and perhaps other reasons. For clarity, this requisition is the flow-through tax and is collected on behalf of Rocky View Foundation by the municipality. Just to be extra clear on that one. So the annual budget policy. This is where Councillor Knight's question kind of gets touched on. The town does not tax overall market value appreciation or depreciation. However, individual market value changes will be different for each property with different impacts to their tax levies. On average, for the 12 months ending June 30th, 2023, non-residential properties experienced an increase in market value of 8.9%. So that's inflation that we're talking about. And residential properties experienced 6.0% inflation increase. So taxable assessment growth. The taxable assessment on new development is just over $35 million, composed of $33.6 million in residential and $1.6 million in non-residential assessment. So we can definitely see where the growth is occurring in Crossfield. It's definitely very heavily in the residential land use. Property assessment. As established by provincial legislation, the annual property assessments have been prepared based on property sales between July 1st and June 30th. So that's where the residential property assessments are performed using a mass appraisal methodology, and they do use statistical information from actual sales data points collected in that year from July 22 to June 2023. So of course there's a lag. So whatever those sales look like from that time, that's what our 2024 assessment is based on, partly based on. The combined property tax and assessment notices will be mailed on May 16th, 2024. Assessors and administration staff will be available by phone or in person to discuss current assessments, comparable assessments, and related concerns. The town advertises the combined property taxation and assessment notice mailing through the Rocky View Weekly, the town website, social media, and on town-owned billboards. Combined property taxation and assessment notices will be mailed no later than May 16th and are due on June 28th. This excludes those that are on pre-authorized payment plans. Financial implication. The 2024 municipal tax requirement is $4,476,545. The revenue requirement will be attained by collecting $3,164,459 in residential taxation. That's 71%, which equates to a municipal tax rate of 5.2166. And just over 1.3 million or 29% in the non-residential taxation, which equates to a tax rate of 6.2599 in 2024. So council always has options and could direct changes to be made to the proposed bylaw before considering it. However, my recommendation is that you give all three readings to 24-01 taxation bylaw.
Thanks, Amber. Questions for Amber?
Through the chair.
Go ahead.
In previous years, we've only done the first and second reading. Is there a reason we're requesting all three readings tonight?
No, yeah, it's truly up to your discretion. By not giving all three readings today, it still provides time to read at the next scheduled meeting and ensure that we adhere to the timelines required to have those tax notices prepared, printed, and ready to be mailed by the 16th. However, going through all three readings today just provides additional time to get to that that deadline.
And last year's tax rate was 3.1 for general tax increase, is that correct? And 4.1 for non-residential, is that correct?
I'm
On the special meeting council, it's 04, 25, 23 last year.
I will have to take a minute, I suppose, and try to catch up to you, Councillor
Yeah,
Knight.
yeah, go ahead and take a minute. I'll give council time to think of way more questions. Yeah, CEO Kinsa.
Maybe Counselor Knight, if you can provide some context as to where that information is, you're pulling that from, just to make sure Amber is looking in the right
I pulled it
spot.
from the special council meeting last year,
Okay,
04, April 25th, 2023.
so April 25th, 2023. Okay, thank you.
And I did find it in the Dropbox.
Oh, yeah.
Remember? Yeah.
Yeah, that's coming up quick.
That's why I should have remembered that. I remember being here on my birthday last year.
That works.
Okay. Oh, sure, yeah. Hi, Councillor Knight, thank you. I believe I have with Mrs. Nash's help, I think what you're looking at.
Okay.
And so in last year's report, it states that the 2023 rates included a 3.1% general tax increase and a non-residential rate split increase to 1.0. And that rate split aligned with the annual budget policy approved on April 18th. Is that the
Yeah.
section that you're referencing?
Yeah.
Okay, so that would have been that was the budget increase that was approved. The additional 3.1% revenue that was required to fund all the services and whatnot that the town planned to provide last year, and that that rate split to 1.0 just meant that the non-residential or the industrial and commercial customers, their tax rate was going to be equal to the residential tax rate, because historically it had dipped below, which is quite an anomaly. So we are trying to slowly inch that back up into a more reasonable differential.
Yeah, and that's something that we talked about during budget. Yeah.
Okay, so I guess my question then is the actual rate of the increase that we're looking at. From a physical number point of view from last year, to this year, what is the difference?
The additional was the $239,000. Is that
What percentage point of view?
well, the percentage, 1% of a revenue increase is 41,000. So that is it's equivalent to approximately 5.7%.
Okay, and then what did we do last year?
In 2023, it was
Yeah.
3.1.
Okay.
Yeah.
So even though housing market's up, we've increased population, we're gonna almost double the tax rate, is that what we're,
No, that's not what we're saying. No.
okay, then I'm missing something.
Um, I do have some additional information. I could bring it up on the screen that might help. I did some analysis of, various properties in the town. If you'd like to see that information, just on what this, the tax bylaw, what the impacts are to various properties.
That'd be good, I'm not seeing where we were and where we're going.
Okay.
I couldn't quite hear that, Lindsay.
Oh, I think we just have to wait for the,
Yeah, I think that
Project-
CO Barney's just gonna weigh in while we're waiting for the screen to pop up.
So I just want to thank you, Mayor Harris. Counselor Knight, I just want to, just to be clear, I guess, to make sure we're all kind of on the same page, that in December of last year, council went through discussions to approve an interim budget. At that point, there was the increase that Amber had referenced here just a short time ago of $239,000. So that's been approved by council, and the motion just made moments ago approves the final budget for 2024. So I just want to be clear
I just wanna see.
that it's, but yes, so what Amber's showing you right now is how that impacts our residents. So hopefully that'll
Yeah,
help
no,
clarify things a
that's
little
all
more.
I'm trying to see from a,
Perfect.
because when I try to explain it to somebody, I don't understand it at all, I might as well.
Yeah, no, absolutely. Absolutely appreciate that.
okay, so if you want to flip around, I'll try to make it a little bit bigger because it's, or I think maybe I can go one more. There, that's pretty clear. All right, so we'll just, if you just focus on, kind of this middle section. So this first property, for example, last year it was assessed at $640,000. This year it's assessed at $680,000. That's a 6% assessment increase. So inflation. Okay, based on last year's tax rate and this year's tax rate, the difference in their bill would be $8.76, or sorry, 72 cents.
Per month.
A year. That's the
For
difference
30.
for the entire year. Good question. Thank you. So what we see here is, yes, we've increased the budget by $239,000, but what we've also done is grown our base, plus that rate shift in the non-residential properties makes a difference. So now the commercial and industrial are carrying their piece of the pie got bigger. So that means the residential piece got slightly smaller by an equivalent amount. It shifts that tax burden to the non-residential properties slightly. And another example here, and secret, I have a real hard time keeping secrets. Some of these might be examples of people sitting in this room right now. So in this property last year, it was assessed at 502,000. This year it's 529. That's approximately a 5% assessment increase, and they'll actually see their property taxes go down. Because if you remember last year in December, when I presented the budget and that $239,000, and I said it's going to be like $1 increase, and you guys all thought, I probably am crazy for saying that, but it is, when you factor in shifting some of the weight over onto the non-residential side, the impact is not significant. This property, for some reason, in this particular neighborhood, the assessment went down by $1,000, which is really nothing, but they'll actually be paying almost $200 less per year in taxes than they did last year. It kind of doesn't make sense. But then if we scroll down to here, this property is seeing a 9% assessment increase, their taxes are going to go up. And same with these guys down here. I just happened to put that these in an older area, more mature area of town, and their assessments went up more than average, so they're going to see a slight increase. It's not that significant. So if we pop
Well,
over,
this is absolutely perfect. This
Yeah.
is puts numbers to fact.
Oh.
Yeah.
Read a budget thing that
Yeah.
this
Oh,
is
no, I
awesome.
can
Evan.
see
Thank you
this
for
one.
bringing this up because it makes, I can explain this now, 100%.
And when
Okay.
you look at the mill rates, the mill rate in 2023 was 5.9 and this year it's 5.2. So the mill rate's actually gone down due to the increased assessment.
Yeah, that's exactly what happens. Your assessment goes up and the mill rate goes down. They work in opposite of each other if one to balance things out. That's just the nature of how assessment and tax rate I'm sure there's a proper word to describe when things are what's that? Yeah, they're opposites. They work in opposite directions to balance each other out. Yeah.
And I think when you went through this with us earlier this year too, you let us know that it's not the same house to house. It's
You
gonna be
can't-
like this.
You know, it's very dynamic. It's very hard to explain because you can't really say on average because there's probably not a single, well, actually there are a couple averages, but very few people are average. You're either above or below and you don't necessarily, so telling you what happens on average doesn't really help the individual. That's why, you know, we suggest people to call the town, call administration so that we can help walk them through and educate them a little bit on the nuances of assessment. But if we look over here at non-residential real quick, we see some properties have had significant increase, like, you know, a fairly significant increase in assessment. And they're looking at about a 12% increase year over year of what their tax bill would be. But that's in line with what they've experienced in assessment growth, plus a little bit extra to account for that shift. So just this property remained the same and their taxes barely, you know, went up slightly, like very minimal. And again, you know, the numbers, this one here, you know, you have a 25% assessment increase. I'm not sure what happened if it wasn't a complete, I don't know why this one went up that much, if there was work done at that property throughout the year or something. So they're expecting to see a, you know,
And it could be the
equal
same for some of the
increase.
houses that were increased more with their assessment value. Maybe they finished their basement or
yeah,
maybe they did an,
Built a
Yeah.
garage.
yeah.
yeah,
Yeah.
exactly. That's absolutely correct. And the assessor does receive permitting type information, so that does inform the annual assessment. Yeah. Okay, well, I'm glad that you found that this little this helpful. So that's excellent.
Yeah, and I think that even afterwards, if even council could be sent just a couple of statements or whatever, where we could, if somebody asks us questions, we could all be on, you know, give them the same answer
Sure. Yep.
Yeah.
We can do some
instead of us
FAQs.
forgetting and slipping, you know?
Yeah.
That'd be me.
Our maps come in handy when you keep them.
That's right. Great. Any more questions for Amber?
I have a question, but through the chair. Also, even with